got a shock jobs report which now puts a spanner in the works. Markets are shaken a little bit, but Bitcoin forming a critical pattern, as you can see here on the hourly chart. I'm going to break down what we can expect from this market. What did that jobs report say, and what does this now mean for Jerome Powell and his rate cutting cycle? Remember, one of the key factors outside of the Bitcoin spot ETF that markets are so excited about going into this year is a wider macroeconomic situation. It's a situation around, are we going to get our rate cuts? And what do we know rate cuts depend on? They depend on two things. The first one being CPI inflation, which we're going to talk about shortly. Inflation has to come down. And the other is we need to see a softening of the jobs market. We've spoken about this at length over the last 12 months or so. We need the labor market to soften. You need supply and demand in the labor market to come to somewhat of a parity to stop wages from rising. One of the biggest factors which creates a cyclical effect towards inflation is wages going up, and we need that labor market to soften. Unfortunately, just now, breaking news, we just got the payroll figures coming in hotter again than expected. 173,000 new jobs expected by analysts. It came in at 217,000 new jobs. December's job report showed employers added 216,000 jobs for the month, while the unemployment rate held at 3.7. At least that held. Let's also take a look at some of the details here. So we can take a look here. The report, along with revisions to the previous month's count, brought 2023 jobs gains to 2.7 million, or a monthly average of 225,000. So still down from 2022, which is good, but labor's still a little bit sticky, right? And this may make Jerome Powell think a little bit, because right now, if you jump on over to the Fed rate monitor tool, markets are pretty convinced that we're going to stay where we are. Now, there was an element of people, about 10% at one point, starting to price in that we could get a surprise cut in January. That's now whittled away. That's now basically nothing. The market fully pretty much understands here that we're not going anywhere. The majority of the market is still kind of thinking maybe March time. Remember, the next meeting is March the 20th. Maybe we can get a rate cut in March. So if we jump on over to here to the Fed rate monitor tool, you can see that 55%, it's dropped a little bit. It was as high as 70, I think it was like 65% the other day. It's now 55% of the market saying, okay, maybe we're going to get a cut at the next meeting in March. They're ignoring the one that's coming up at the end of January. Now, there's one more piece of data that Jerome Powell's going to have up his sleeve, and that is going to be the all-important CPI reading. Yep, the CPI reading comes out on January 11th. That's next week. We will be covering it here on this channel. Make sure the notification bell is on. Make sure you're in our Telegram group, ijazcrypto.com/TG. That is where you can see my trades, right? I share with you guys, I've achieved 375% spot returns, no short in the market, no leverage in just December. Crazy returns. And this is not just fluke. This is a systematic process of how I trade systematically over time. Pragmatic, safe, risk management. Jump into our Telegram group. You're going to learn a lot from like-minded people and get extra alpha in between these daily videos as well. Now, if we jump on over to the charts, I want to share with you a very critical pattern that's forming here on the hourly chart. If you've taken my TA course, ijazcrypto.com/TA, you'll be familiar with this pattern. A very basic, bog standard pattern. Even if you hadn't taken the course, you'll probably spot this pattern. But you need to understand something. When you come towards the apex of the triangle, it means time is now running out. Bitcoin needs to make a decision here. And what's the downside risk? If you take a look at the downside risk of this pattern, how low could you fall? You could fall to the bottom here, the final point here, and that's really coming down to 41,000. I mean, you could call it here 42,000 here, right at the bottom, right? Ignore the wicks. Let's say 42,000 on the candle closes here. Now, if you want to look at the upside, what would the upside be? The upside would be you break out past 44.4, past 45.2, and finally get to your price target of 45.8. Now, the bulls, if they do want to play out this situation, if they do want to break to the upside, will want to create a higher high. They need to create a high above this peak in order to keep their upward trend going. Now, the bears will want to do the opposite. They're going to want to send you down here to 41.6 and create a lower low, right? They want to create a downtrend here to move you to the downside. So this is a very important pattern. Now, one important thing, if you guys are experience in the markets, you're going to know that the bigger players will understand this is a very common pattern, right? Like we said, the average person could recognize this pattern and try to trade off the back of it. So very often what you get is a bit of manipulation. And what you'll see is that if somebody is longing this trade, if you're longing this trade, what do? You might go, I want to put my stop loss, I'm going to take an entry and I'm going to trade this to the upside, right? So they know all your stop losses are sat around this region, and that's called liquidity. And so what a very sensible, experienced whale might do, or set of whales or market makers may decide to do is, hang on, we're going to come here, we're going to take all that liquidity, and then we're going to move to the upside. Very, very common. So oftentimes, even though your thesis is right, that you think the momentum is going to go to the upside, it will go via a lower price point, take the liquidity, and then move. That is why these patterns aren't always as straightforward as just breaking down like this. Now, equally, the opposite can be true as well. If this price action was indeed to move to the downside, people will be shorting. They'll have their stop losses here, and they want to short down here to the market. Well, guess what? Market makers can liquidate those guys as well, right? Move the price up here, take those shorts out, make it look like a fake out to the upside, and then move down the price to the downside, okay? So be very, very cognizant of what's going on here. If you want to learn more tips and tricks like that, that's all going to be in our Telegram community, ijazcrypto.com/TG. I've been trading well before crypto. I was trading in traditional finance at an investment bank. This was my bread and butter, right? I've always been trading since I was a young buck. Now, if we then take a look at this, I want to zoom up to the 4-hourly chart and kind of bring out the EMA ribbon as well. Excuse how messy the chart's going to be. Let's see if I can get a bit of a tidier one. There we go. Now, you can see here, we are kind of in sideways territory here, right? If you look at the trend ever since this uptrend, this steep upward trend, we've not been able to hold or lose really our 4-hourly EMA ribbon. So you can comfortably say that on the 4-hourly chart, we are consolidating. And if we zoom up to the daily chart, you will see the consolidation. It's very, very clear, right? This was the breakout of this triangle, extended move to the upside, consolidation period. So pretty much from this period here on the 6th of December, we've been consolidating for now 30 days here to the right-hand side. Big deal. Now, what happens after consolidation? You expect a big move. Now, the question is going to be, is this move going to want to drop all the way down here, retest some support, maybe at this horizontal at 37.9, 38,000 region? Or is there enough impetus here in the markets for the price to now break through 45? Now, do not be surprised to see if we need a few attempts at 45.7. This is not an easy level. If I zoom up to the weekly chart, you will see where we're at. Right, this is the Bitcoin chart. This is where we're sat. Do not expect this level here, which is characterized by this important point. This was the tipping point that we left 48,000 and started heading to our eventual lows of 15,500. This is basically where the horrible bear market started, even though, yeah, technically from 69 you had a big fall down here, but this was really where it started to kick into gear. So expect this to be a challenging area. Just like this cluster here took 3 attempts to break, 1, 2, 3, we eventually broke it. Do not be surprised to see if we need to collect some support. Do not be surprised, in other words, to see Bitcoin go, you know what, we're going to have a bit of a couple of down weeks, go back up, a couple of down weeks, and then eventually break up. Now, of course, guys, that's just technical analysis. We've got to use our common sense to say we take technicals, we ladder on fundamentals, and we ladder on macroeconomics. We started this video off by looking at macroeconomics, and we know that different things can change this pattern. Bitcoin doesn't necessarily need 3 attempts to break through that level. If we get a spot ETF approved by the time I upload this video, boom, you can go straight through it. So you have to ladder that on as well. Now, there could be other factors which could help us move. If we need to wait until March to maybe get our first rate cut, maybe then markets will use that as impetus to move, or maybe markets going to decide, you know what, we're going to go straight through 50,000 now. We're not going to wait. Either way, we are very extended away from our weekly EMA ribbon. Now, that whilst that does mean normally you want to wait for a little bit of a call off, you cannot guarantee that Bitcoin can't go up. It can. Bitcoin is that asset class that can do what it wants to do. Look at this. It just defies logic. If I was making videos here on Bitcoin going, yeah, but guys, it's extended from the EMA ribbon, and it just kept going up and up and up and up and up, right? You can't force Bitcoin to correct when it doesn't want to correct. When it wants to go, it goes. That's why it's the best asset class to trade. It's amazing, fun, and volatile, and one of the reasons we care so much about it. But the reality is, that's where you can also get caught. So my thesis is always try to do my DCAing, try to get in the markets, even though I'm at higher price points. If I have to buy now at 42, it is what it is, right? Yes, I managed to get some at 15,500. Yes, I managed to top up at 18 and 19 and 20 and all these nice price points. But the reality is, if I have a conviction that I think Bitcoin's going to go much higher, it's a matter of time before it gets to 69, 100,000, new price points from there. I'd be silly to be arguing over whether we get to lower price points or just start DCAing now. So for me, I try to avoid obvious green candles, right? The market's pumping 5-6% this week or 10% this week, and I dive in. I try to avoid those. If I can get it on a red day where the market's a little bit fearful, good. That starts making me feel good if I'm buying from support. Now, sometimes you're not going to be able to catch it on weekly support, right? Sometimes when Bitcoin's in the mood and like we're talking about the ETF and a rate cut and all these things are starting to line up, then you're going to struggle to wait for the perfect time for it to come into the EMA ribbon. It might never come back down to these levels. And so in those moments, I look to the daily EMA ribbon. And that is why I'm comfortable sometimes buying the deeper we go into the daily EMA ribbon when I see bullish intent. Now, that doesn't mean I would load all my position, right? If I wanted to, let's say, add $100,000 to Bitcoin, I do not go gung-ho and just add it right now in the EMA ribbon. No, I'll start nibbling. I just nibble. I'll buy in maybe in 1Ks and 5Ks and some 10Ks. And the lower we fall, the bigger those chunks go, till eventually how much I want to allocate is in the market. I ladder in my buys. So there you have it, guys. Shock job report shakes the market a little bit, but overall still in its nice consolidation pattern here on the hourly chart, this symmetrical triangle which we're going to watch here. Make sure you do not get shaken out. Make sure you do not get caught on this triangle. If I decide to trade this or any altcoins, I will let you guys know in the Telegram group, ejarscrypto.com/TG. Thanks for watching, and I'll see you in the next one.